I want to talk a little bit about tax compliance and discuss the importance of doing things the right way in your business. I'm always evaluating my clients' operations for tax and accounting compliance and asking the questions to make sure they're doing things the right way. I know it's tempting to cut corners to save a buck, but is it worth it, and do you really understand the risks?
Welcome to this episode of Accounting and Tax Tips, Smart Strategies for Small Business Success, with certified public accountant Tina Moe.
Tax compliance is a very vast topic and covers everything under the sun, from paying your employees properly to income recognition and so much more. The question I always ask is, if the IRS or any of the various state governmental entities came knocking, what would be their point of contention? Where are your risks? The IRS and other state and local governmental agencies aren't always looking at what you think they are. What may seem irrelevant and unimportant to a business owner can mean a significant change to your tax picture in the wake of an audit. Let me give you some examples. Matt owned a local construction business where he had both employees and subcontractors. Like many in his industry, he'd pay one guy as a subcontractor to try him out, and if the guy was any good, he'd put him on payroll. What Matt didn't realize was that he couldn't do this if the guy was performing the same job as both a subcontractor and as an employee, and that issuing both a 1099 and a W-2 to the same individual in the same year could flag him for a closer look by the IRS. The IRS did, in fact, take a closer look, and after performing an investigation, they deemed that the 1099 payments were really wages. Matt was faced with owing the back employer taxes of over $35,000, as well as the penalties and the interest. He had no idea the level of pain he would experience by cutting these corners with these labor costs. This was a very costly lesson to him and nearly put him out of business. Several years ago, I began working with Deborah, who just had been contacted by the IRS for an examination. She was in sales and had several manufacturers she used to manufacture equipment that she sold to her customers. This equipment was custom made, so she required a deposit before the equipment went to manufacturing. Once the equipment was delivered to her customer, she would then collect the additional amounts due, and the deal was finalized. In Deborah's mind, the initial deposit wasn't income because the sale hadn't finalized. But what she didn't know cost her. According to the IRS, if you take a deposit, a non-refundable deposit from a customer, it must be recognized in the year it was received. This means Deborah underreported her income for 3 consecutive years. The IRS discovered this, taxed the additional income, and charged penalties and interest, which she is still paying back. Many people dream of owning their own businesses, but in order to be successful, you have to know you're doing things the right way to reduce your risk. Many of us don't think twice about taking our cars in for an inspection or going to the doctor for a checkup, but how many small businesses think about doing the same for the health of their company? In an effort to help our clients avoid these costly mistakes, we've developed a comprehensive business compliance checkup. This checkup consists of over 30 different tax and accounting aspects we analyze to ensure that our clients are completely in compliance. If you would like information on this business compliance checkup, visit my website at www.actservices-inc.com and schedule an appointment. If you have a tax question, please email it to me at tina@actservices-inc.com, and I'll make it the topic of a future show.
Thank you for watching this episode of Accounting and Tax Tips with Tina Moe. For more great information, visit Tina's website at www.actservices-inc.com. Also browse the other shows found right here at Indie Biz TV Shows.